What has happened? Slow sales has meant distress in the real estate market, and several properties have come up for auction by banks. These could come at a discount which make them quite mouth-watering. The big question is, should you be looking to find a good deal in the auction market? Harsh Rungta, founder and CEO of apnapaisa.com, joins us. Harsh, of course, we just talked about Orbit Corp's entire project getting auctioned to LIC. Now, in this case, the existing buyers will be protected, I'm sure, but the bank empty vacant flats will be auctioned by LIC to recover some of its money. Tell me, in the last 6 months or so, has there been an increase by banks in auctioning such repossessed properties?
Oh, absolutely. I think banks and other lenders such as LIC Housing Finance, I think all of them have been on an overdrive to protect their NPAs and to try and collect on their NPAs. Of course, most of the problem lies on the corporate side rather than on the retail lending side. But obviously, I think home finance is also an issue, and very distinct from the auction that you just mentioned. That was an auction of the builder's interest in a property. I think the auctions that we are talking about are consumers who have defaulted and their properties are being auctioned. I think even that we have seen lots of activity, especially from the public sector units who are looking aggressively to bring down their NPA levels.
I know they're using everything. I mean, the NPAs, in fact, have become scary for the PSU banking sector. All right, so now let's come down to whether there's a bargain in these repossessed properties which are getting auctioned by banks or not. How much cheaper are they? Are they 5% cheaper, 10% cheaper, or are they just a couple of percentage points cheaper?
See, cheap, I think I would be, and every consumer should be extremely suspicious of something that supposedly quote unquote comes cheap. I mean, nothing comes cheap in a market where the information is clearly transparent. So just to give you a quick background, what comes up for auction in terms of repossessed properties are properties of borrowers who are non-cooperative with the banks.
Right.
Those who are cooperative with, they may have defaulted, but if they are cooperating with the banks, then they would make a regular sale, because that is in the interest of the buyer himself, since he typically realizes market value for it. And please remember, whatever value the bank may realize, it can only keep back the amount that is due. Anything above that has to be returned to the borrower. So, right. Clearly, most cooperative borrowers would cooperate with the bank to make sure that the sale happens outside of an auction. Anything that comes to auction by definition is of a non-cooperative borrower, and that is why you see it is typically the public sector units whose auctions are more popular. Very few, in fact, very little of public auction is seen in the private sector lenders for homes. So, I think very clearly they are not cheap. I mean, I would caution buyers about that. It is not meant, this is something that you must do your complete due diligence on. Obviously, sometimes if you are eyeing a particular area and you getting a flat in that area, if you do your due diligence, you should bid for it. Otherwise, for a lay person, I would advise to keep away. This isn't cheap. There is a saying that a cheap lawyer is the most expensive lawyer on earth. I think similar thing applies for cheap property.
So am I hearing that if you actually went out in the market today where there is a slowdown, you could actually get much better mouth-watering deals from sellers who are desperate to get out, or especially investors who are desperate to get out of some of the properties that they are holding, rather than trying to get the bank auction route? Am I hearing that, Harsh?
Oh, absolutely. I mean, and if you're prepared to take the risk on an under construction project, again, not something I advise. I have always maintained that when you buy under construction, you're actually lending money. But I mean, if you're willing to take the risk, obviously you will get a much better deal for a much better title. Okay. And even today, second sale from consumers who are staying in properties but need the money urgently, it is coming, it is clearly a buyer's market. It is coming at extremely good deals.
Okay. Finally, just to understand, I mean, if that's the case, then banks must be finding it very difficult to auction these properties. If they're not willing to actually reduce the prices, they want to extract their pound of flesh, then how are they being able to sell those repossessed properties?
So it hasn't really been a huge success. If you look at the auctions, I mean, you look at the major banks, SBI has been a major auctioneer. From whatever reports are available, I think only 15, 20 or probably 30% of the properties have been sold. The others have just been carried over. So I don't think it has been a huge success, partly to do with the fact that the markets are not doing well, partly to do with the fact that people are suspicious of anything that has come up on auction.
All right, there might be some pending dues and you don't know what the nature of the power between the bank and the borrower has been, and I think it's risky. Unlike, though, I must say, we might have a few things to learn from the US, Harsha. That is a great auction market. I mean, when the properties there go in auction, they're real auctions, you can actually get very, very good deals, isn't it? Hopefully, we'll reach there someday. Distressed markets always throw up newer selling and buying models. Thanks very much for joining me today.